BitMine, the largest Ether treasury, is moving fast. In just a short period of time, it has positioned itself as one of the most aggressive and creative players in the crypto space, and their investment in MrBeast highlights that. This is not just a company that buys Ether and waits. They are actively building an ecosystem around it. In this video, I will go through the rationale and why this move is good for Ether. We will look at how BitMine is thinking like a tech company, a venture capitalist, and a financial institution at the same time. Their investment in MrBeast was made as part of their moonshot strategy. These investments are not about short-term profits. They are about optionality. They are about asymmetric upside. These are strategic, high-risk, high-reward investments. Most treasury strategies avoid this type of risk, but BitMine is doing the opposite. I view them as kind of the venture arm, the venture capital investments of BitMine. Their first moonshot before MrBeast was a 20 million investment. The company they have invested in owns more than 5% of WorldCoin. WorldCoin is trying to create a global digital identity system that can onboard billions of people. This investment did not make the headlines, but it laid the groundwork for something much bigger. Their investment in Beast Industries surprised most people. This was the moment when investors really started paying attention, because this was not a crypto-native company. It is a media and consumer brand. And lots of investors didn't understand the rationale and questioned how it fits into the company's long-term strategy and vision. Because on the surface, it looked strange. Why would an Ether treasury company invest 200 million into MrBeast's company? What does YouTube have to do with Ether? What is the link between them? How could this add value? Tom Lee believes that their 200 million investment in MrBeast will open doors for them. He sees this as more than just an equity investment. He sees it as a strategic bridge between crypto and mainstream culture. The MrBeast investment will make a 10x return. That is Tom Lee's base case. So he believes that the 200 million investment will be worth 2 billion one day in the future. That alone would be a massive win for BitMine, but he also says that is not even the most important part. He believes that the real value is in the call option side of the investment. And this is where things get really powerful, because this could pave the way for collaboration between BitMine, Ether, and MrBeast. And collaboration is where adoption happens. This could be in the form of loyalty tokens and any other form of working together. Imagine millions of fans earning digital rewards. Imagine exclusive content unlocked by tokens. And imagine fan engagement powered by smart contracts instead of platforms. MrBeast has the most followers on YouTube and has the widest reach. His videos have over 500 million views on a monthly basis. The Super Bowl had 256 million views, so his videos gather around twice the eyeballs, and most of them are young. So this could introduce Ether to a much wider audience in the future. This is something no marketing campaign could ever achieve, and it is also important to highlight that MrBeast's audience is mostly Gen Z and millennials. And these groups, especially Gen Z, are more flexible regarding future payment systems because they grew up with digital money. They are comfortable with apps and online wallets. Crypto adoption and how digital assets and digital payments are viewed differ significantly by age, and this matters more than people realize. With this move, Ether can be positioned as a native financial layer for the next generation of the internet. Not just a speculative asset, but a tool people actually use. The other important element of this investment is that MrBeast is working on a finance app. This is extremely important because apps are where behavior changes. It will be interesting to see what it is going to be built on and how it will integrate Ether. If this app uses Ether, the impact could be massive. This could also be an important monetization opportunity for Maven, which is the staking solution developed by BitMine. Maven could become the backbone for yield, rewards, and financial flows inside this entire ecosystem. That is a huge opportunity going forward. One of the most important utilities of Ether is that you can earn a yield by staking it. And this is what separates Ether from digital gold. It is productive capital. This is going to be an important revenue for BitMine because it turns their treasury into a cash flowing asset. As you can see on this slide, once BitMine reaches 5% ownership of Ether, it could generate significant earnings from it. Calculated with a $3,000 Ether price and a yield of 2.8%, BitMine could earn over $500 million per year. And then the company can decide what to do with that money. They could reinvest it into moonshots, keep it in Ether, or pay it out as a dividend. Tom Lee believes that Ether is becoming the next monetary system, not just a blockchain, not just a token, but a settlement layer for the global economy. Last year, there were many positive developments in the crypto industry, but crypto prices didn't reflect that. Government legislation, crypto reserves, tokenization, and increasing use cases, both from startups and institutional players. JP Morgan selected Ether for its first ever tokenized money market fund, an asset class valued at over $9 trillion. This is a huge signal. Then you have Morgan Stanley. They filed for an Ether ETF. This brings Ether into traditional portfolios. But they are not alone. BlackRock registered a new ETF called the iShares Staked Ethereum Trust. This will focus on staked Ether, which is different than their iShares Ethereum Trust, which is a spot ETF. Then you also have Robinhood. They are tokenizing stocks using Ether. Tokenization could give a huge push to Ether's price in the future. Then you also have companies like Vanguard. They said that they will allow their clients to trade and invest in crypto ETFs and mutual funds that hold crypto, while Bank of America will allow their advisors to allocate up to 4% of their clients' investments into crypto-related assets. This is billions of dollars slowly moving. So you can see that a lot is going on, and institutions want to get in on Ether, and BitMine is positioning itself ahead of them. Thanks for watching, and please give it a like, subscribe, and watch another video. See you in the next one. Thank you. Bye.